Abhiram Eleswarapu joining us from BNP Paribas. Abhiram, thank you very much for joining us. What is your take on the market in general right now, especially given the fact that the entire narrative of inflation peaking out soon, not only India but globally too, and then rates would either flatten out or with a 6-month lag start going down. That entire argument has got challenged. Do you think next few months could be a bit in a range or a bit of pressure, at least for globally as an equity, as an asset class, and here in India too?
Hi, Ajaya. Actually, we have a balanced view on where equities are headed towards the next 6 months or so. Broadly speaking, investors are not as much positioned in equities as one would think for the reasons that you mentioned. Now, the fact of whether inflation is coming down as fast as people expected and therefore rates coming down as soon as expected is probably not happening. And therefore, I think there'll be a range-bound market, at least for the next few months until the next trigger comes in. Now, on the whole narrative about rate cuts, we do expect a 100 basis point rate cut at some point next year, but not this year. And I think some parts of the market were expecting that we would start to see some of that towards the end of this year itself, and that may not happen. Now, coming back home, if you see where valuations are for the Nifty at around slightly above 18 times, 1 year forward PE, and that's not terribly expensive. In India, actually, it's the mid and small caps that have rallied. And I think that the large caps will still hold pretty much towards till the end of the year.
Abhiram, what are your overweights as far as Indian markets concerned?
Well, focusing on 4 themes at the moment. First of them is affluent consumption. And I think we spoke about this the last time as well. If there's something that's going really well in India at the moment, it is the middle class and above spending, which we classify as affluent India. And if you see the latest tax data as well, you saw quite a bit of jump from people from one tax bracket to the higher one. And that suggests that the affluent theme is still very much on. That includes more than just consumption. It also includes healthcare, for example, retail for that matter. The second bit we're looking at is financials, especially large cap banks, which have not really performed this year. Even though most other sectors have at least given, let's say, double-digit return, the private bank index probably is in single digits year to date. That's another space we are focusing on because the fundamentals are still quite strong there. The third bit is industrials. Yes, sorry, go ahead.
Yeah, let's break it down a little bit. For financials, there is one variety, large cap banks, private sector ones, right? And then there is the mid cap, PSU banks as well. Or even NBFC, which are actually clocking very good growth as far as last 3-4 quarters are concerned. Which side do you have what kind of preference within financials?
Well, if you think about it, the area where we are kind of positive on right now is the private sector large banks, which have underperformed, and insurance. These are the 2 areas that we're focusing on. Now, to the point that you made, what's really happened this year is that investors started to focus on the periphery in terms of how to make money because they did understand that the fundamentals are quite strong in general for India, especially in the financial space. And when you try to make money on the periphery, you tend to focus on NBFCs and smaller names. And that's why you saw this big rally across most names, which are probably up 30, 40, 50, even 60% in some cases. And that is the area where I'm actually starting to get a little cautious right now, just looking at where valuations have reached and the fact that we're not quite sure how the second half will pan out just before the elections. So focus on the large cap names and insurance.
Okay, that is something which you like as far as the financial basket goes. What are your thoughts on industrials, especially the ones which are also like a power ancillary play, because their valuations got slightly in the expensive zone. Do you think that they've corrected enough or the earnings have caught up enough to get back there?
Maybe if you kind of just break down industrials overall, see the order book situation is still very strong and we expect that will remain the case at least up till December. Maybe as we head into the new year and with elections coming, there could be some slowdown on that front, but that is to be expected. Overall, I think the picture around industrials, especially defense and those kind of space, wherever government capex is involved, we think that is still very healthy. And so those are ultimately these stocks do trade on order books, and as well, order books keep increasing. I think that the stock prices will reflect that. And if we look at a little deeper, I think what we really like in the industrial space are two things that I mentioned. One is, of course, the large conglomerates, followed by defense. These are the two areas that we think that investors are also focusing on incrementally.
Healthcare. Talk about healthcare, especially the way the US, FDA glare and even the pricing pressure there seem to have. Do you think it's bottomed out? A, and also, do you have also like some of the India-centric domestic pharma names?
Yeah, I mean, we've long liked the India stories better than the generic names. And even if you would look outside of India, what we really like are the specialty pharma names. Now, having said that, healthcare is quite broad, right? So, and I earlier mentioned to you about affluent India theme, and that would include beyond pharma. It includes diagnostics, for example, a space that we tend to like. Another one was hospitals, which obviously we liked quite a bit, but that said, those stocks have also rallied quite a bit, and we're trying to probably think, kind of recalibrate on whether that is a space we still want to be in. Diagnostics, yes. Now on the pharma side, what's happening now is that in the last quarter or two, we got a sense that pricing pressure may be bottoming out. But with what's again happening in the US with clamp down on prices and so on, I think that maybe we're not quite towards the end of that. Instead, you might as well focus on India names where largely companies are kind of still echoing a double-digit or even higher kind of revenue growth picture.
Right. All right, Abhiram, we'll let you go on that one. Thanks so much for joining us on the show today.